Today we will be dealing with a very important session on the recent interim budget 2019-20. There have been many proposals provided by the government. In today's session, we will be dealing with the major taxation proposals being proposed in this present interim budget 2019-20. So, before going into the details of this particular topic, have an idea that this is only an interim budget because after 3 months there will be an election. Once a new government is formed, a full-fledged budget 2019-20 will be presented by the new government. Okay, even though since 2nd June is our prelims, for those who are writing prelims, the major proposals and related topic. Okay, so keep this in mind. In our session, we will be focusing only those points which is important from your prelims as well as mains point of view. And this can be useful for those who are going to attend interview from 11th February onwards. Okay, so regarding the taxation proposals, okay, there have been many confusion among the students regarding the recent budget proposal regarding taxation. So, in this session, we will make you the concepts regarding the recent changes in relation to taxation in a very, we'll understand in a very simple manner. Okay, so the most important taxation proposal in this the recent interim budget 2019-20 is about a proposal, the budget proposal regarding the exemption limit, tax exemption limit. Okay, so several newspapers have mentioned the news like this, that the interim budget have proposed that a person, an individual with a income. So if you are having an income up to 5 lakh, precisely if you are having net taxable income up to 5 lakh from 2019-20 onwards, there will be no tax, no income tax for those individuals whose net taxable income is up to 5 lakh. So there have been many questions, even few of my students asked that, what about those who are having a taxable income above 5 lakh, net taxable income above 5 lakh? For them, there is tax. Okay, so regarding that, you will understand it. Okay, now from your examination point of view, since this interim budget have made changes to the certain tax proposals, we need to have an idea about the income tax structure, that is the income tax slabs. And keep this in mind that for resident individuals, the income tax is non-uniform based on age. This is a very important point I am mentioning. Based on age, income tax slabs varies. That is, we categorized 3 groups of people based on age. That is, for people up to an age of 60 years, there is a separate income tax slab is there. And then between, we call it as senior citizen. That is, who are having age between 60 years up to 80 years. There is a different tax slab is there. We will discuss today. And then we call it as senior citizens, means very senior citizens or super senior citizens. That is, who are having an age of 80 years and above, they are having a different tax slab. We will see that. What is that? So try to understand that based on age, there is a different tax slab is there for resident individual. Keep this in mind, for resident individuals. For NRIs, tax slab is uniform. Non-resident individuals. But for resident individuals, based on age, tax slab is different. Okay. So, since the interim budget have mentioned about people with net taxable income up to 5 lakh tax exemption. We'll see in detail about it. Before that, keep this in mind. The present government, this is not the first time it's making changes in our income tax structure. There have been changes from the first year when the present NDA government came to power. That is, these things are important from your prelims point of view. Okay? These things are not much discussed in the newspaper. From your examination point of view, what all important changes have happened in the income tax structure in the last 5 years, especially in the present government period, is important for you because UPSC can ask questions from it. So have an idea that budget 2014-15 have increased the tax exemption limit. Okay, so you need to understand the meaning of tax exemption limit. It's a very simple concept. It says that tax exemption means individuals who are having a income up to a particular this limit, no need to pay tax. So tax exemption limit. So if you come under the tax exemption limit, then that individual need not to pay that tax. Okay, so what this present government have done in 2014-15 is that they have increased the minimum tax exemption limit from 2 lakh to 2.5 lakh. So this is a very, very, very important point. Okay, so it means that from the year 2014-15 onwards, if any individual who is having an income less than 2.5 lakh per year, so for in an annual year, that is for a year per annum, if your income is less than 2.5 lakh, then no need to pay tax. So that is, so have an idea. Presently, our minimum tax exemption limit is 2,50,000. But again I told you, it is based on age, because up to this 2.5 lakh exemption, minimum tax exemption limit is for those resident individuals who are having an age up to 60 years. Above 60 years, that minimum tax exemption limit is quite higher. We'll see that. So that point you need to note down. The second important change made in the 2014-15 budget is that the government have increased the deduction limit from, that you see, there is a, try to understand that our income tax law has many tax exemption provisions. One of the most important among them is Section 80C. You might have seen that if you invest in insurance and other related Section 80C category, then that income, that investment will come under, means you can deduct that income when you calculate taxable income. Okay, so the Section 80C, so most common people, you had seen that as part of the Section 80C, we all invest in insurance, most commonly LIC. So though your investment made in investment like life insurance, most commonly life insurance LIC is being, that income, that investment is being deducted while calculating your taxable income. So that deduction limit under Section 80C have been increased by 50,000 to 1.5 lakh. That is one important point to note down. Okay, so in 2014-15, the government have increased the Section 80C deduction limit from 1 lakh to 1.5 lakh. And also, if you are paying housing loan, the interest, the per annum interest, that is up to, the interest paid up to 2 lakh on your housing loan can also be deducted while calculating taxable income. Now why I am discussing these 2 points is that is regarding Section 80C deduction and regarding the interest paid on housing loan up to 2 lakh is that there have been, the people were expecting that the government will make some changes. It was expected that the government may increase the Section 80C limit as well as the interest paid on housing loan, but this interim budget have not made any changes in relation to Section 80C, increase in deduction limit on the Section 80C, as well as interest paid on housing loan. So, what changes have been made in budget 2014-15 is retained. Okay, so that you need to keep in mind regarding this deduction, tax deduction limit. Okay, so this is actually a very a great relief for the, especially for the middle class as well as lower income, means those who are paying tax in the lower stage. Okay, and then in the another important tax proposals came in the budget 2017-18. This is very, very, very important. Okay, budget 2017-18 have made a big change, a big impact in the tax, in personal income tax structure. So what this 2017-18 budget have done is that it has, so we know that up to 2.5 lakh there is no tax, means because who are having income up to 2.5 lakh, it is tax exempted. And those people or those income between 2.5 lakh to 5 lakh, earlier the tax slab was 10%. Means those who are having income in this slab 2.5 lakh to 5 lakh, they have to pay a tax of 10% only to that income between 2.5 lakh to 5 lakh. But from 17-18 onwards, that 10% tax rate have been reduced from 10 to 5%. Now try to understand that in the personal income tax structure, from 2017-18 onwards, there is no 10% slab. We are having 5% slab. Then after that, no 10% because 10% have been reduced to 5%. Then after 5%, directly we are going to 20% tax slab. So everybody was expecting that the government will bring down this 20% because there is a sudden jump from 5% tax slab to 20% tax slab from 17-18 onwards. Hopefully in the coming years, the government will rationalize this income tax slab. So presently, this is a very important point to be noted down. So from 2017-18 onwards, this income 2.5 lakh to 5 lakh, tax slab is 5%. Tax rate is 5%. In the tax slab, tax rate is 5%. And also, so this changes from the 10% to 5% have resulted in a tax relief of 12,500 to every taxpayer. That is, if you see the 5% of 2.5 lakh, 5% of 2.5 lakh is 12,500. Then, coming to the 18-19 budget. Okay, what the government have done is, see, try to understand that in the personal income tax slab, the government imposed a cess. Earlier, there used to be an education cess. But from 2018-19 onwards, the government also introduced health cess. Okay, so now the cess is called as health and education cess. So the cess on your income, personal income, have been increased from 3% to 4%. That's a very important point to be noted down. Budget 2018-19 have increased the cess on your taxable income, personal income, from 3% to 4%, and that cess is now called as, from 18-19 is called as health and education cess. Out of this 4%, 3% will be for education, 1% for health. That point also you need to note down. Again, very, because same thing, a concept of standard deduction. This concept of standard deduction was reintroduced in the 2018-19 budget. Why this standard deduction concept is very important is that because there have been an news in regarding standard deduction in the interim budget 19-20 also. So first we need to know that when it was reintroduced in 2018-19, it was reintroduced. Okay, so standard deduction was introduced in this 2018-19 budget. So standard deduction, as the term suggests, that if you are a salaried person, okay, so this concept of standard deduction is applicable to people who are having salaried salaried income as well as for pensioners. Okay, so the standard deduction is applicable to salaried people as well as pensioners. Okay, so standard deduction, when it was introduced in 2018-19, the amount was 40,000. Okay, so this 2018-19 budget also having increased the cess from 3 to 4%, also introduced this concept of standard deduction. Standard deduction is nothing but a flat deduction to all the salaried individual. Okay, so keep this in mind. Okay, so from your income, a flat deduction of 40,000 was introduced in budget 2018-19 because it says that, okay, it is this flat deduction of 40,000 as standard deduction is considered. Why there is a flat deduction is that it is expected that as part of your employment, if you incur any expenses, so an amount up to 40,000. So when you calculate taxable income, if you are a salaried person, when you calculate your taxable income, 2018-19 budget will allow you to deduct 40,000 from your taxable income under standard deduction. Now again keep this in mind, this concept of standard deduction is in use in the interim budget, which we will discuss in detail. So we are discussing the last 5 years, the present government major taxation proposals which can be asked for your coming prelims. Okay, now, so these are the major changes happened in the current NDA government period, that is from 2014-15 to 2018-19. All these changes are important from your examination point of view. Okay, so just also have an idea. I already told you the income tax slab varies for resident individuals. The keyword is resident individuals based on your age. So just have an idea. If your age is, or individual's age below 60 years, up to 2.5 lakh, there is a tax exemption is there. 2.5 lakh is the tax exemption. But if your age is between 60 to 80 years, the tax exemption is up to 3 lakh. Okay. So if your age is up to, means if an individual is having an age less than 60 year, tax exemption limit is 2.5 lakh. If you are in the age limit is 60 above, if you are a senior citizen who are having an age between 60 to 80, in that range, your tax exemption limit is 3 lakh. And if you are a super senior citizen are those who are having an age of 80 years and above. For them, the tax exemption limit is 5 lakh. So 2.5 lakh, 3 lakh and 5 lakh are the tax exemption limit based on your age. That you keep in mind, because that also can be asked in your prelims point of view, because this is one of the major proposals. Since there have been changes in the tax proposals, this tax slab can also come, they can ask as a question for your prelims. Now regarding so just have an idea, only in the tax exemption limit there is a variation based on age. Remaining after 5 lakh, tax rate is same. So up to 5 lakh only there is a change is there. So after 5 lakh, if the tax rate is same for all the resident individuals, whatever is your age. Okay, so we will just from your examination point of view, just have an idea about the tax slab for people who are having an age of 60 years and below. Then we already know that no tax up to 2.5 lakh, and then 5% tax on income between about 2.5 lakh and up to 5 lakh. And I already told you, now there is no 10% tax rate. So after 5% tax, we are jumping to 20% tax if your income is between 5 lakh to 10 lakh. And if your income is above 10 lakh, then 30%. So these are the present income tax rate for your, that is 5%, 20% and 30%. And along on this tax rate, there is cess. I told you 18-19 have introduced health cess. So we have an health and education cess of 4%. Now try to understand that this cess, this 4% is on your taxable income, means is on your tax. See, from the tax rate, how much you have to pay to that, we have to pay an extra 4%. So try to understand that cess and surcharge are tax on tax. So to a tax rate, this will be imposed. Okay. So after a tax rate is imposed, so to the taxable amount, 4% education, health and education cess will be there. That you need to keep in mind. Okay. And another important thing is that there is also surcharge if your income is above a threshold limit. For example, so health and education cess is common for all if you comes under the taxable income. But if your taxable income, if your net income taxable income exceeds 50 lakh and above. So if your other than the cess, you have to pay a surcharge of 10%. So if your net income is above 50 lakh and less than 1 crore, surcharge is 10%. So a surcharge of 10% will be imposed on your income tax payable if your net income is above 50 lakhs and less than, above 50 lakh but less than 1 crore. And if your net income is above 1 crore, then surcharge will be 15%. So this also you need to keep in mind. Even though there will be no mention about this in the interim budget, from your examination point of view, these points regarding cess and surcharge as well as the tax rate is important for you. This is not only important for your UPSC prelims examination, any other competitive examination like your state PSC and other SSC exams, this information is very much vital for you. Okay, so that you keep in mind. Now we'll see the five major, from the examination point of view, 5 major income tax changes announced in this recent interim budget 1920. The first proposal is the finance minister have said that there will be a tax rebate. There will be a tax rebate under section 87A of Income Tax Act 1961. So the tax rebate is up to 12,500. And you know that if your net taxable, if your net taxable income is up to 5 lakh, if you are a person who are having a net taxable income of 5 lakh, you know that up to 2.5 lakh, it is tax exempted. Between 2.5 lakh to 5 lakh, the tax rate is 5%. So to the remaining 2.5 lakh, if you find out the 5% of 2.5 lakh, that comes as 12,500. So basically this tax rebate of 12,500 in reality means if your net taxable income is up to 5 lakh, then there is no need for you to pay the tax. But if your net taxable income is above 5 lakh, then you have to pay the 5% tax rate between 2.5 lakh and 5 lakh, as well as then based on your income, which slab you comes, you have to pay. So try to understand that this tax rebate, this is a very, very, very important point. This is a point you need to note down. This is a confusion students have, that keyword is if your net taxable income is up to 5 lakh, then only you will get this tax rebate of 12,500 and thereby you need not to pay any tax. But if your net taxable income is above 5 lakh, then you have to pay all the tax rate. So it's a vital point to be noted down. Okay. Now, so the key point is this tax rebate of 12,500 is only applicable for those with net. So key point, it is not gross taxable income, it is net taxable income. So if your net, what is this? What is the difference between gross and net is that you know that there are many tax exemptions are there. I already discussed you tax exemptions like section 80C. You all know that up to under section 80C up to 1.5 lakh there is a tax exemption is there. Means you can deduct from your taxable income and then you can pay interest paid on your housing loans up to 2 lakh. So all you can deduct. So from your gross taxable income, if you deduct these tax exemptions, you will get net taxable income. So be very careful, it is net taxable income. So if your net taxable income is up to 5 lakh, you will get this a tax rebate of 12,500. Thereby it means that no need to pay any tax if your net taxable income is up to 5 lakh. So this is the proposal of this year's interim budget, that from this year 2019-20 onwards, from the financial year 2019-20 onwards, again just a reminder, this is an interim budget. There will be a full-fledged budget most probably in June. So the June full budget have to also propose the same, then only it will be implemented. Okay, anyway, I told you from your examination point of view, if they ask a question, it will be from the interim budget, because when the full budget will be announced, already your prelims will be over. So I am just concerned about your prelims, so be careful about it, that this is the point you need to note down. You need not to worry what will happen in the full-fledged budget. So what this changes, the real impact is that if you are having a net taxable income up to 5 lakh, you can claim the entire tax payable as tax rebate. That means if your net taxable income is up to 5 lakh, no need to pay any tax. Example, I am giving an example so that this concept will be very clear for you. Imagine your gross taxable income is 6.5 lakh and you have made an investment of up to 5 lakh under section 80C. And I told you, any investment under section 80C, including insurance, is you can deduct that amount. So your total taxable income is gross taxable income is 6.5 lakh. 1.5 lakh comes under section 80C. So you can deduct from 6.5 lakh minus 1.5 lakh. Then your net taxable income comes as 5 lakh. So this is one example only. Even if you are having 7 lakh taxable income and you are paying interest for your housing loan. So and after deducting these exemptions, if your net taxable income comes 5 lakh and below, you will get this tax rebate, so that you keep in mind. Okay. So if you invest in section 1.5 lakh under section 80C, then your net taxable income will come under 5 lakh and you can enjoy this tax rebate in the financial year 19-20. Okay. So this point you please keep in mind. This is one of the most important proposal where many students have doubt, what is this gross taxable income, net taxable income, what will happen if your net taxable income is above 5 lakh? Then I told you, normal. So the government have not made any changes to the tax slab. Keep this in mind, the government have not made any changes to the tax slab. It is 5%, 20% and 30% based on your income. What changes it has done is, under the section 87(8), it has increased the tax rebate up to 12,500. And I told you 12,500 comes if you know that if your income is up to 5 lakh, if your net taxable income is up to 5 lakh, the maximum tax you have to pay is 12,500, and that amount you can rebate, you will get tax rebate. In that way, we can say that the net taxable income up to 5 lakh means if your net taxable income is up to 5 lakh, no, there is no need to pay tax. But keep this in mind, the interim budget have not made any changes in the tax slab. Okay, so that's a very important changes announced in the interim budget 2019-20. Second change is in regarding the standard deduction. I told you, standard deduction was reintroduced in the budget 2018-19. And when it was introduced, the standard deduction amount was 40,000. This interim budget have increased the standard deduction amount from 40,000 to 50,000. Okay. So I told you this standard deduction is a flat deduction for all the salaried people, including the pensioners. As part of their employment related expenses, they will get a flat deduction of 50,000, provided you are a salaried person or a pensioner. That's a key point to be noted down. So this year interim budget have increased the standard deduction from 40,000 to 50,000. Okay, now try to understand that. I told you the first changes regarding the tax rebate up to 12,500 is only for people or individual who are having a net taxable income up to 5 lakh. Now the second changes regarding the standard deduction of increasing the standard deduction from 40,000 to 50,000 is applicable to all the category of salaried person. So this is the only benefit. This standard deduction increase of from 40,000 to 50,000 is the only major benefit for those who are having a net taxable income above 5 lakh. Major thing. Okay, so that you need to keep in mind. So for those people who are having a higher tax rate, for them this benefit will come, and this 10% increase deduction, if you can see the tax slab, okay. So the, see, this is actually AY is assessment year. That's not important for you. That's why I'm not discussing. I'm just showing the benefit. This assessment year 2021 means the financial year, 1 year lesser. See, assessment year is, so if you know the assessment year, financial year will be 1 year. So 1920 will be the financial year for the assessment year 2021. Okay. So you can see that if your net income is after 80C deduction, if your net income in the 1920 financial year or assessment year 2021, after this increase in standard deduction, it will come as 5 lakh. And if your net taxable income is 5 lakh, you know that it is completely tax exempted. But in the higher slab, if you are having a taxable income of more than 10 lakh, I told you that this 10% deduction you will get. Even if your net taxable income is 10 lakh 60,000, with the increase in this deduction, it will come as 10 lakh 50,000, and then your taxable amount will be reduced compared to the previous year to, this is the difference, 3,000. So if you are having a net taxable income above 10,000, the benefit of this standard deduction of 10 increase in 10% is around 3,000 in that range. Just an idea. They will not ask you further detail about it. Just have an idea what is standard deduction, to whom it is applied, mainly to salaried persons and pensioner. And when it was reintroduced in the budget 2018-19, what changes this interim budget have done? It has increased the standard deduction amount from 40,000 to 50,000. This is the second major changes regarding the income tax, which is also important for your coming prelims. Next is, it's not that important, but just have an idea. Just even if a question been asked, they will give you some few statements. Just have an idea. These are the other changes. Not that important like the first two we have discussed, but just have an idea. The one proposal is that regarding the exemption from notional rent. Okay, just have an idea. The keyword notional rent in respect of two self-occupied house properties. Okay, these are the two keywords. Okay. If any individual is having two self-occupied house properties, okay, if you are having two self-occupied house properties, then the notional rent will be exempted. So to understand this notional rent, try to understand that before this interim budget, if a person is having two self-occupied properties, then to the one property, a deemed rent, there will be a deemed rent is being considered, and that rent is, so that why it is called notional, that he is not getting any rent, but it has been considered as a rent and it is taxable. So that notional rent in this interim budget, if you are having self-occupied property, is being exempted. That is the third income tax related changes for you. I told you that not that important, just have an idea what is this notional rent, and what regarding the, if you are people who are having two self-occupied properties, property, for that earlier there used to be exemption only for one, now for two the notional rent has been exempted. That is the third changes announced in the interim budget 1920. Regarding the fourth proposal is regarding the capital gain exemption. You need to understand that what is this capital gain. Over a period of time, if the capital you are having or the investment you are having have made some gain, now try to understand that there is a concept called capital gains tax. So if you are selling an investment which is, and you are having capital gain, the government will impose capital gains tax on you. So if you are, I'm talking, this capital gains tax exemption is in relation to house properties. Okay, so if you are having a house, a property, normally when you sell a house property, the capital gain which you get after selling that house property comes under the capital gains tax. But if you reinvest that capital, the capital gain amount in another house property, you are being tax exempted from the capital gains. So there is a capital gain exemption if you reinvest the capital gain in some other house property. But earlier it was only one house property, now it has increased to from 1 to 2 house property. So this is the changes the recent budget has made, that the budget have proposed to extend the one time, this and try to understand that this benefit of capital gain to be invested in 2 housing properties only in a lifetime only once. In a lifetime only once this is applicable. So one time benefit of, in your lifetime, one time benefit of a capital gains tax exemption if you reinvest in 2 house property. Earlier, this exemption was applicable only to 1 house property. But keep in mind that this exemption, capital tax exemption or capital gain exemption is only if your capital gain is less than 2 crore or less. If your capital gain is 2 crore and more, this exemption will not be there. This is another taxation proposal. And the last major proposal. There are other minor proposal which is not important from your prelims. That's why I am not discussing. This I will say this is much more important than the third and fourth. Fifth one is much more important than the third and fourth because it will benefit the middle income class. So you need to understand a concept what is called as TDS. TDS means tax deduction at source. So in the source, at the source itself, tax will be deducted. So regarding the TDS, the interim budget have said that if any individual, if they have invested in a bank deposit, if they are having a bank deposit or a post office deposit, obviously you know that if you are having bank deposit or a post office deposit, definitely you will be having interest, you will get interest for your deposits. And if your interest income is above 10,000, keep this in mind before this interim budget, if your interest income from post office deposit as well as bank deposit is, if it is above 10,000 for a year, then what the bank or post office will do is, they will deduct 10% from your interest, 10% tax will be deducted and remaining amount will be given to you. There will be some cases in which this, the tax which been deducted at source, the people find it difficult to get the refund, even if your taxable income is less than that. So the government have made for those people that the exemption limit from 10,000 to 40,000. So it means that, so what is the changes being made? The exemption limit for TDS on interest on your bank deposit as well as post office deposit have been increased from 10,000 to 40,000. It means that TDS tax will be deducted at source only if your annual interest income is above 40,000. If it is less than 40,000, 40,000 and above, if it is less than 40,000, TDS will not be deducted. That is again a good relief for the middle class bank deposit investor or FD or post office deposit investor. Interest income for having 20,000 or 25,000 per annum income, this will be a big relief for them. Okay, so these are the major personal income tax proposals being announced in the interim budget. What all I have discussed is just important from your examination point of view. Other things is not that much important from the examination point of view. That's why I have not discussed. And hope that all of you who are even beginners have got an idea. And what I will suggest you is that, okay, if you are preparing for any competitive exam, especially for economy, you should have the habit of reading newspaper, important news related. So what I will suggest you is that all those news which I have discussed in regarding the taxation proposal in regarding interim budget 1920 is have been shared in our economy prelims telegram channel. So those students who have not joined our economy prelims telegram channel, the link is being given in the description. You can join it and read, you can search in the telegram regarding this budget 2019-20, interim budget 2019-20, and you can selectively read those articles regarding this taxation proposal so that you will have much more clarity. So read it and Hope that this session have helped you a lot. Thank you for watching my session. Thank you.